Good afternoon. This is Brian Split with Allendale here on Friday, October 29th, 2010 with your closing commentary. We did have some very light and mixed trade today. The December corn contract was up 3 cents at 5.82. January soybeans were unchanged at 12.36, and December Chicago wheat was down a penny at 7.17 and a quarter. Now that really does not paint a very good picture of what we've seen for the week and for the month. Starting with the surprise USDA report early in the month, reducing the yield drastically on the corn and providing a sharp rally for the market. So for the week, we had December corn up 22 cents, and for the month of October, up 86 and a quarter. The December 11 contract, down just a penny today, was up 60 and 3/4 cents on the month. On the soybeans, January beans up 24 and a half on the week, up $1.20 and a quarter on the month. The November 11 contract down 2 cents today, but up 88 cents on the month. And looking at the wheat market, we did have December Chicago up 46 and a half on the week. The interesting part of that is that we were up 43 and a quarter for the month. So prior to this week, wheat was actually trading lower for the month, and really turned courses here on Monday. July 11 contract down 2 and a quarter today, up 71 cents for the month, and that was at 7.83 3/4. We had some rumors out early this morning that China had rejected a cargo of corn of 50 to 60,000 tons that was I guess brokered by a Japanese trading firm, and so it has not been confirmed, but that could be part of a bigger story of some territorial disputes that we're seeing right now between China and Japan, and a little bit of a trade spat there. Other than that, we did have a new high close, closing above 580, and that's a strong way to close the week and the month. We're going to have a USDA report on November 9th, which is not next Tuesday, but the following Tuesday, and we're going to be looking for further yield reductions there, and another estimate of the Chinese corn crop, which is another important part of the equation that we're looking at right now. As far as soybeans go, we've seen aggressive buying of soybeans by China all month long. Up until last Thursday, it was reported that we had China buying a total of 3.4 million metric tons, and as of that Thursday the 21st, we've seen reports this week of new purchases between China and unknown buyers of an additional 702,000 tons. So that's over 4 million metric tons of purchases of soybeans for the month of October. Very big sales there. This pace of buying is really not likely to last, but while it's still here, it's going to be continue to be extremely bullish. On the wheat side of things, we had a very strong week, regained leadership of the markets here this week, potentially a lot of spread unwinding, and we did again have some disappointing crop conditions early in the week based on dryness both here domestically, and we're seeing concerns in Australia about dryness there, with really no rain in their forecast for about the next 10 days, so that is still maintaining a friendly outlook. We are looking at this July Kansas City contract, new crop wheat, and there is a potential double top on that chart in the $8 area, so that's something we're going to want to pay very close attention to as we go into next week's trade. Moving to some of the outside markets here, as far as the meats, we do have the cattle market. Box beef closed lower again today. That's 2 of 5 days this week. And we did have cash cattle down $2 on the week at 100 even. We are still seeing exports very strong on the beef, and there isn't any sign yet of that slowing down. On the hogs, down on cash all week long. Cash hogs down. Cash pork will also be lower on the week, and the futures we're making new lows for the week here today. So ending the week on a bearish tone. The kill for the week was even versus last year, when we should be seeing that 3% lower. So as Rich Nelson, our director of research, put it, there are more hogs out there, and they're big. So this is still in the short term a bearish scenario that we're looking at. As far as outside markets, looks like the equities are trading just about unchanged right now going into the final hour of trade. The dollar very quiet, down 5 points. Crude oil down 75 cents, and gold finished $15 higher today. I wanted to make mention we are recommending going long some of these soft markets with options. There's been a lot of excitement there, namely in the sugar and the cotton, and recent recommendations have been filled. So keep an eye on the cotton and the sugar markets here. They've got very bullish fundamental tones right now, and we could see some excitement as we go into the delivery period for December cotton, and also still some bullish factors out there for the sugar market, so watch that. last but not least, we want you to be very well aware that we're having our annual conference January 21st and 22nd, and today is actually the last day for our early bird registration. So if you don't give us a call today, you still do have a chance over the weekend to sign up online until Sunday night to get the $99 registration special. After that, next week we will be changing the registration to $149 as the standard fee. So if you have interest and you know you're going to be available, you might want to save yourself $50 and go ahead and register. Other than that, if you have any questions or want to talk to a broker or anybody else about what's going on in the markets, please don't hesitate. Our number here is 1-800-2-MARKET. That's 1-800-262-7538. And again, check us out online at www.allendale-inc.com. And good luck trading in the month of November. Thank you.